What is going on, everybody, and welcome to another weekly update. And what I'd like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do also provide technical analysis on Sundays as well as a daily pulse on the market at Hamley 137. So you can check me out there as well. But before we get started, remember to go ahead and drop a like, share the video, drop comments as to what you are looking at, and let's go ahead and get this video kicked off. So, as you know, right now there is still a lot going on. We are building up a lot of anticipation for this transition to occur in just a week away. Yes, we are just about a week out. But what we are seeing is this current administration is continuing to take action to handcuff this upcoming coming administration, and potentially making this thing a lot worse than it already is. And just the debt in itself is horribly bad coming into this new administration. So we'll see what happens. But as of right now, things are not looking hot at all. So as we look past in the past week, again, a lot of these news events are giving you a pulse on where the consumer is at, where the economy is at. And that's what's most important. And why I do these videos is to give you an understanding of what's occurring. So that way, you don't just assume the market's going to keep going up, and that's that's how we're going to react, right? We have to understand that there's a lot in play here. And so, with that being said, medical debt is now required to be removed from credit reports. Obviously, a lot of people have been accumulating a lot of medical debt over the past couple of years just because of the pandemic, from the essentially the side effects, whether that's from the vaccine or whatever the case is. We're not going to get too much into that, but nonetheless, interesting to see as people are trying to improve people's credit scores are getting absolutely just obliterated at this point. And we've talked about how bad the consumer is. So they're trying to do whatever it can to try to help with that report. Again, that's not really good because, again, you have to understand people just still can't afford the pricing because, again, they don't have a steady floor to stand on because of our current economic environment. There's drainings, their essentially life savings are being drained as they continue to move in with their parents. And then again, the biggest working class in history is essentially becoming homeless, and that percentage is growing very rapidly, as 54% of the U.S. homes listed Saturday on the market or sat on the market for at least 60 days in November. So again, the longer and longer we are pushing this down, the more and more we're seeing it's harder to actually sell. It may not be so much the interest rates, although the interest rates have exploded well past 7 at this point. I believe they're sitting at 7.5 right now for interest rate on a new home. And so not only are you having to purchase a home almost straight out with cash, which a lot of people are doing. And something I talked about is these adult parents that are moving in with their parents. They are essentially forwarding them their inheritance, and they're using that to straight out purchase a home at this point. And that's what you're kind of seeing there. And so, even to the turnover rate for these homes right now is still very, very hard to get off the market. And that's going to lead to a massive downfall because eventually, the longer you progress this, the people are going to have to dramatically drop the pricing on these homes because, again, people just can't afford it. And there is no demand there. And so the fact that it's over 50% is alarming. U.S. has seen an 18.1 increase in homelessness in 2024 of 770,000 people. Again, that number continues to uptick, and it will continue to accelerate through this year. And something you need to pay attention to is, again, there's a lot of fake jobs out there. And speaking of jobs, over this past week, U.S. has added 256 jobs versus 164 expected. So they have the expectation extremely low, and we came in about 100K over that, which again is still very much a problem. And why the market sold off on Friday was because of the fact that if you show strong growth in jobs and inflation is starting to rise, what's the incentive for the Fed to have to come and start continuing to cut rates? And that's something else I have on here is that the rates uh, are it's a little just two lines down here is the rate cuts are not until June. At least that's what they're anticipating now. So we came into this year with potentially another cut in January, which is now been completely obliterated off this jobs report. So that is what's insane to think about, is that again, when last year coming into 2024, they talked about we're going to get a lot of interest rates in the beginning of the year, and we didn't see those until August. And then now they're saying we're not going to get anything until June. I think that will be accelerated, and we'll see a lot of cuts coming a lot sooner than anticipated. Maybe not in January, but there's a lot of stuff that's could be unbuckling that could force the Fed's hand, especially because the numbers are not correct. A lot of the revisions are showing that they're well mismanaged the numbers of jobs that are actually legitimately out there. So, and with that being said, you had Yellen hoping the new administration will take the deficit serious. And she's already apologized. And now she's saying that she's hoping this new administration will actually do something with the debt, because, again, they're spending way too much money. Trump wants to see an extension of the debt ceiling. Now, the debt ceiling is supposed to go off this week as well. That's another big thing, is they're supposed to come up with an agreement on that just before he comes in office on next Monday. And so if that doesn't happen, he was kind of looking for no debt ceiling as well, was another thing I heard just about probably 2 weeks ago. Because you have to understand, he has to continue to spend, because if you're not constantly spending at this point until you can make adjustments with policy, this whole thing will just collapse. And that's exactly what we're seeing. As a lot of these things are starting to add up and put in place. You have to understand, it's when the pandemic kicked off, the whole world agreed to put the whole world on lockdown. That should tell you something, that we operate very much in sync, a lot more than you would think we would. And this is another thing that's largely concerning. We've been talking about China and how it's plummeting, where we saw China's bonds plummet this week. And then China's main stock exchange has asked some large mutual funds to restrict stock selling. Again, we're starting to see this across banks. I don't know why I have chains here, but that's supposed to be China. But yeah, so we are starting to see a lot more bigger issues here going on with the global market, and with China bond market is essentially plummeting. You have to understand, the massive money that's been pumped in by the Treasury is what's helping with essentially the liquidation in these markets. And our market's going to be the same way, where it's going to be hard to find liquidity. So even though things are pumping to all-time highs, that is essentially been generated or manipulated by the Treasury, because they are pumping and buying all these bonds that nobody wants. Nobody wants this bad debt. You're having all these banks that essentially, again, have bonds at ridiculously low rates. They're completely screwed at this point, because now they are massively underwater with a rapid increase in rates. And so now, even with all that being said, with China messing with the bonds, and the fact that they're not allowing people to purchase the bonds, and they're not allowing people to sell in the exchanges, it's putting a lot of potential inflationary issues for the U.S. in trade. You have to understand, there's a lot of trade that still happens between countries, even despite all the disagreements or whatever may be going on. There's still massive issues, and this puts a huge strain on the U.S., especially if with Trump coming in and potential talks of massive tariffs on China. Biden's even gone straight after the jugular for Russia and started putting a lot of sanctions on them before they step out of office. But this massive debt bomb, these countries are putting, and not only other countries, but our own current administration is putting massive stress on this up and coming administration that's going to make things a lot worse. And then, needless to say, and then to shout out those people in California as well, not to forget them, and the massive fires that have been going on in a lot of the Hollywood areas, and Malibu and those areas in around Los Angeles are getting burnt to ash. And so, again, there's a lot of crazy things that are currently going on that are just too much of a coincidence to be occurring. So, and then you also have the Bank of Japan expected to make 2 to 3 rate hikes in 2025. The last time they made a hike, we've essentially had interest, essentially had the overnight repo incident where the market gapped down. Imagine if they did that twice more, on top of all the bank stuff and the debt, on top of all these other issues where you have a consumer that's absolutely in the doghouse right now. They can't even afford to go out and to live, and then you're putting more stress already on top of them when they can't even feed themselves or provide housing for themselves. So again, you have massive. So all the news that you're essentially seeing is putting more and more stress in an already unhealthy consumer. That's not, and you have to understand the reason the consumer is unhealthy because you're also applying a lot of this stress on businesses. Even though you're bailing out the banks, you're still doing quantitative easing for the banks, but you're doing quantitative tightening for businesses and for essentially people, and people can't find work. So if you get fired, you go a long period of time without finding work again, which could be, again, a huge problem. So, and then on top of everything, you also have a large population of illegal immigrants that are being paid under the table, which they're not trying to get rid of because that's been essentially what's propping up our GDP as well. And then you rug pull them, and the reason that, again, that's so horribly bad, because you're also subsidizing all this stuff. So you are wildly spending out of control, and there is no need for it. And that's why this current administration trying to make some of those changes. We'll see how much they can actually make. Again, you can only do so much with executive action. You still need other people on your team to be able to operate, and they're trying to handcuff all this stuff from happening, and it's going to not look pretty. So you can't assume that there's going to be some massive volatility in this market, and if we can actually make some good change, but again, you have to help out. The Southeast is again hit by hurricanes, now hit by a huge winter storm, and then you have California that's essentially up in flames, and all these random fires that are starting to pop out with no water. Again, there's too many coincidences that are going on, that you can't see how this has all been essentially almost staged at this point. So that being said, upcoming events, we have a big week on deck, a huge week on deck. Not only you have major events, but you got some big bank earnings coming up. So Tuesday we start out with core PPI, which isn't going to have as much weight as perhaps just core CPI, but that will have weights. And then you also have the beige book, which is going to talk about monetary policy that comes out at the end of the month, along with your again Super Bowl week of earnings at the same time. So you have a lot of big things just occurring all at once. And so this week is going to start that out. So this is, again, I think, in my opinion, the first domino kind of fell on Friday, even though I believe that a lot of those jobs are going to be revised down to hardly nothing again. But with that being said, because, again, it's under the current administration, not the up-and-coming administration, all those true numbers are going to come out here at some point. I don't know when the official numbers come out for over the past year, but it's going to look absolutely ridiculous. And you're already at negative a million. I think it's about 1.5 million thus far that jobs never existed. So even though people are saying, you're losing your mind, there's no such thing, when no, it's true. There's 1.5 million jobs that didn't exist over the past year and a half, but they try to do it for your votes. So whatever they can do to manipulate the data. So upcoming events, again, monetary policy, end of the month, that the week of the 29th is going to be huge. So you have Super Bowl week of earnings, which essentially means you have tons of heavily weighted stocks in the index reporting that week. You also have monetary policy, which, again, at this point, we know they're not going to do anything with the rates, but you still will have Powell, and he's essentially going to come out and kind of sugarcoat everything. Obviously, they don't want to make any kind of decision because they're waiting to see what policies are actually implemented by Trump's administration, if that is for tariffs, and what kind of tax cuts they're looking for there as well. So those are big things you have to keep in mind. And then we have core inflation, obviously, coming out this week. Upcoming earnings, I'll kind of get more into that when we look at the calendar here, but I've talked about the big earnings that are coming out on Wednesday. This is something I talked about as well as expected moves. So now we're pricing in 112 points, which, again, is well above average. You are looking at almost essentially pricing in the end of the world. The worst we've probably seen this get to is probably about 140, 150 points, which is absolutely cratering just the general market sentiment. Again, the only thing you have really reporting is you have, again, the banks and you have core inflation. So you can see why there's so much priced in this week. So it's not a great week to essentially be trading options on SPX this week. So do keep that in mind. But with that being said, you have Tesla at 27. Again, there's a lot of, if the inflation concern starts to rise, Tesla is going to rise with that. Tesla will fall. All Mag 7 will start falling if inflation starts to rise. So do keep that in mind. Boeing is about normal this week. And then JP Morgan is almost a little over double what it typically is, which is huge, again, because you are coming into an earnings week. So they do price in a lot for that to occur. Now, you have to wait till after they actually report for that number to get adjusted. So don't take any options positions till about probably like an hour after the bell opens on Thursday, because you have to let them adjust essentially the option numbers for that. And so that is wildly concerning there. But again, pricing in a ton this week. So with that being said, let's dive straight in. Again, shout out to Earnings Whisperer. Do love their graphs here to go through these and kind of talk about what I'm really looking at. Now, again, there's a lot of earnings that occur. There's a lot of great earnings, but again, there's specific ones that I am watching because of the potential weight or essentially the weight it can have to change the direction of the market, and that is what's important. So with that being said, let's take a look at what we got this week. Now, this week, we start out, again, I talked about Wednesday. Before the open, you're going to have JP Morgan, Citi, Wells, BlackRock. Again, huge, especially in the beginning of the day. And I talked about how these were essentially positioned on a Friday morning. Now it's on a Wednesday morning. So you got multiple days. If this starts out bad, if you have high inflation with some bad bank earnings, this can start bleeding over and causing potentially massive selling. Now, one thing you have to understand too, the bank term funding program is rapidly running out of money. Coming into this year, we only had 4.4 billion. I believe we've already burnt through probably over like $1.5 billion, 2 billion already, and it's just been 1 week. Now, imagine what it's going to look like for regional banks. So maybe this week may not be as bad, but regional banks are going to start being hit. You're going to start seeing a lot of failures in the next couple quarters because of this, especially if that bank term funding program isn't funded, which it sounds like it's not going to be moving forward. So we're going to have to definitely watch and see how that plays out. But again, there's a lot of pressure being put on inflation, potentially inflation risk with what China's doing with the bond market. And then you have, again, high expectations for banks. So if they miss by a little, it's going to cause a lot of sell pressure on the banks, but eventually cause a lot of sell pressure on the overall index. Tech, if again, inflation's high, tech's going to come down anyway. So these are things you need to keep in mind. So again, Wednesday will kick that off. You'll have core inflation as well as bank earnings first thing in the morning starting Wednesday. And then you got chip numbers coming out on Thursday. That will be important to kind of let you know. Again, if they do bad, that can influence a lot of the chip plays coming into the next couple of weeks. Then Goldman Sachs is going to be huge, Morgan Stanley and Bank of America, and a lot of other smaller banks, PNC banks and M&T Bank as well. So you have a lot of banks for just reporting on Thursday and then a lot on Friday. So again, if things get bad, it can cascade. And this is why I talked about, if you want massive sell pressure to the downside, what you're going to be looking for is a bunch of bad news just flooding the market all at one time. And the last thing you want is bank runs. I've already starting to see a lot of banks and exchanges saying that you can't just transfer large amounts of money. That is already being pushed out there. And that'll be something very interesting to watch Monday and Tuesday. If your bank is warning you about this, keep an eye out for that. These are the things you need to be paying attention to, because they're largely concerned about potential bank runs, especially with the way things are setting up. And if they need to, they just will not allow you to pull out money. Keep that in mind. And that is what's scary about how this whole system is set up. This is why crypto is essentially developed for this specific purpose. So Again, huge week. And this is why I do this, is to try to get you an understanding what's actually going on, so you're not leveraged in this type of environment. That way you are spread out, your wealth is spread out across multiple institutions in case one of them wants to go down, whatever the case is. Maybe you have excess cash on the side, maybe you have crypto, whatever the case is, that you can still survive in this particular environment. So again, this is a massive week with massive other potential details that could follow from this. And again, like I've talked about every weekend, essentially since the assassination, what you've seen is major news events, especially the last 2 weekends going into the inauguration. I believe a lot more is going to occur. So be prepared. They're already talking about pardons again. More pardons are going to come out. I think they'll probably drop on Sunday. Then you'll have this week and whatever more events are going to occur going into that. So again, stay on your toes, because it is going to get wild, it's going to get volatile, and you have to be prepared. And again, what I always say is you need to remain neutral, you need to remain objective about these things, because you need to be able to take positions and not feel some sort of way or become too biased to one side. But you have to understand the underlying truth of what's going on, because there's the truth and there's a utopic view. Again, the utopic view is to control the masses. The underlying realization of what's actually going on, you need to understand that that does take time to play out. But we're seeing it occurring over the past year. You've been essentially gone all nothing but up. Another really important piece of information is this current administration hasn't had a bad jobs report. That's not including all the massive revisions that were incorrectly stating that you didn't have 100 or 1.5 million roughly of jobs that never existed. So again, false reporting to gain your vote. But with all that being said, again, we prepare, we're ready. Again, it's going to be volatile. It will be exciting if you are in this thing to try to make some money and try to leverage and take advantage of the current system and the events that are about ready to occur. So with all that being said, remember to drop a like, and I will see you guys on the next one.